Good morning, everyone. I want to thank you for joining us today for our first steps to starting your business webinar. I'm going to run through a few things while we wait for the rest of our attendees to join us. While I'm going through some of our tips and tell you a little bit about our presenter today, if you would go ahead in the question box and just put your first name and the kind of business you're interested in starting. That really helps us make sure that we get the information that you need for your type of business. I'm Jean Smith. I am the training coordinator for the University of Houston-Victoria Small Business Development Centers. Today's webinar is being recorded, and you all will receive a link to the recording either later today or tomorrow, so you can watch it again. There's a lot of information in it, so if you miss or you feel you missed something, you can come back and you can watch it again. I want to point out at the top of your screen is an icon that says screenshot. And with GoToWebinar, what that is that you can take a screenshot of whatever Mark is showing on the screen, and it'll save an image to your desktop. And if you're like me, you know, I like a lot of notes, but I don't like to get distracted from what's going on the screen. And this is a very helpful little feature that GoToWebinar does have. I will tell you right now, everyone is muted, and that's just so that we don't bog down and slow down the presentation. Sometimes the internet does not handle very well when we all have our mics and webcams open. Let me tell you about the SBDC. The University of Houston-Victoria Small Business Development Center is a business advising and training center, and we serve 11 counties in South Texas. We are part of the Southwest Border Region SBDC network and a resource partner of the Small Business Administration. We are funded in part by a cooperative agreement with the Small Business Administration as well as the state of Texas, but we are not the Small Business Administration. We are a partner with them. Our programs are non-discriminatory and they're available to all. What we offer is we offer confidential, one-on-one, no-cost professional business advising services to small business owners and entrepreneurs throughout South Texas. We can assist folks through the various stages of the business life cycle, whether you're just pre-venture and in the thinking stage, you're actually in a startup mode, expanding, growing, or you're ready to exit. I will note, business advisors do not provide legal or tax advice. And to protect the health and safety of our clients and employees, we do provide our services virtually. So we are conducting sessions via phone, email, Zoom, just a variety of digital platforms. We also have a variety of training programs, just like today's webinar, that are offered at little to no cost. And I will put some information in the chat box about where you can see our schedule. For attending today, you will receive a complimentary copy of our digital newsletter. There's no obligation and you can unsubscribe at any time. At the end of Mark's presentation, a pop-up window will appear with a survey link. Please complete that and let us know how we did. Your comments and your input really guide how our training program goes. Let me tell you a little bit about our presenter today, Mark. Mark Martinez is a certified business advisor with the University of Houston-Victoria Small Business Development Center. Mark's experience in business began in office management with Mr. Reuter before he graduated from college. He's worked in nursing home management and has also worked for the South Texas Electric Co-op in nursery. He worked there as an accountant. And by the way, Mark is also a small business owner, so he understands what it takes to get started being your own business owner. He does hold a bachelor's of Business Administration and Accounting and a Master of Science in Economic Development and Entrepreneurship from the University of Houston-Victoria. And like I said before, if you'll just put your first name and the kind of business that you want to start in the question box, we can make sure that we do provide information that's pertinent to that kind of business. And if you have any questions throughout the presentation, go ahead, put them in the question box, and we will try and get all those answered today. And again, thank you for joining us. And with that, I am going to turn it over to Mark.
Good morning, everyone. Like Gene said, my name is Mark Martinez. I'm the Senior Business Advisor here at the University of Houston-Victoria Small Business Development Center. And what I'd like to talk to you guys about today is starting your own business. Obviously, you guys are here to learn about starting your own business and the steps to doing that. And it's when you're starting your own business, it's an exciting time in your life to be, getting your own business going and started. It's also a scary time in your life as well because it's a risk, right? So sometimes we may have some uncertainties there, but with the proper planning, you can do this successfully, and that's what we're going to talk about today. And I know I only have about an hour to do this, so I may go through some of the things kind of quickly. So if you have any questions, please put those in the chat box or the question box. And with that, also, you can always set a meeting up with any of the advisors here at the University of Houston-Victoria Small Business Development Center. So today's program, we're going to talk a little bit about what the SBDC is, or the Small Business Development Center, what it takes to be an entrepreneur, doing a feasibility study or an assessment for your business. We're going to talk a little bit about financing for your business, because that's always one of the biggest topics that many people have, of how do I get funding for my business, for my new startup. Cash flow and financial statements, those are also things that we need to be aware of as a small business owner. And then talking about creating a business plan. And then we also offer other courses throughout the year in the form of webinars, and previous to COVID, we had a lot of in-person courses as well. And then if we have some time at the end, we'll definitely take as many questions as we can. So let me tell you a little bit about the SBDC, and I think Gene kind of went over most of that already. But of course, we offer one-on-one advising to individuals within an 11-county region. We help you with starting your businesses, expanding businesses, buying and selling businesses, and we're on the management side of the business. And everything that we do is at no cost. It's prepaid, so we're taxpayer funded, and so you might as well take advantage of all the wonderful resources that we offer within our SBDC office here in Victoria. And so with that, if you're needing some one-on-one advising, please do call our office. One of the things that I want to talk to you about are entrepreneurial traits. Some of the entrepreneurial traits are going to be having a passion for what you do. I think that's one of the things that's very, very important when starting your business. Because if you don't have a passion for whatever it is that you're looking to do, it's going to be very, very hard to be successful, because you're not going to have that love for it. The other thing that some of the traits of entrepreneurs will be not only the passion, but resiliency, the ability to be able to bounce back. There's always going to be obstacles that come up in one's life, and especially in starting the business, and just being able to know how to bounce back and regroup. Some of the other things are going to be, being able to, I guess, let me think of a couple other traits here. Not having, or I guess not being scared is what I'm trying to say. Taking that risk. Sometimes we worry about those things, and that's okay. It's okay to worry about that, because it is, like I said, it is a very scary time in your life to start doing that. But there are multiple other traits of entrepreneurs, and we can list a whole bunch of those, and we can go on and on about it. But most entrepreneurs, like I said, have a passion. They are go-getters. They are people who are going to go out there and do everything that they can to be successful. Entrepreneurial myths. Sometimes, we talk about, and people believe that entrepreneurs are born and not made. Entrepreneurs are their own bosses. Entrepreneurs set their own hours, and that they love high-risk ventures. Well, I just talked about, starting a business is risky. And so we're going to, as small business owners, we're going to minimize our risk as much as possible. Setting our own hours, yes, we're also setting our own hours, but if we're not taking care of our customers, then our businesses aren't going to be successful. So sometimes, there may be times that you're going to open up your business even during your off hours to take care of that customer. Being your own boss, yes, you are your own boss, but technically you're also answering to your family. If you obtain a loan, you're answering to that loan officer, you're answering to your customers. So there's a lot of other people that you're still answering to, and it's not just you, right? So, and then also that entrepreneurs are born and not made, and that's also a myth, because anybody can learn to be an entrepreneur with practice, with planning, and doing all the right things in order for you to be successful. Anybody can become an entrepreneur, and anybody at any age practically can become an entrepreneur. But typically, most entrepreneurs, the median age is going to be at least 35 years old is when most people decide that it may be a great opportunity or a great time in their lives to start a business. So other popular misconceptions are going to be that all that's really needed to start a business is a good idea. I will have more personal freedom, take more vacations, and make my own schedule. Having a business, I always equate that to having a baby, right? You have to take care of it, you have to nurture it, you have to make sure that it's getting what it needs, right, in order for it to grow. So just like with the baby, you're not always going to leave your baby here and there so that you can go on a vacation and have fun. So you have to take care of that business. And so these are all other misconceptions, that you're going to be able to take vacations and do all those things. I remember, starting 9 years ago and hearing a story of someone that started their own business because they wanted to take more vacations, and it was 5 years before they took their first vacation after starting their business. So 5 years, and that was because they were very, very busy in taking care of that business and taking care of their customers and taking care of the things that needed to be done in that business. Another popular misconception is that there are free grants or free money, right? Unfortunately, there are no grants for starting small businesses from the federal government. Now, some of these small communities that we service, some of them may offer some grant funding, but that is coming from the local economic development corporations in some of these smaller communities. So if you're in a smaller community, you may want to reach out to your local economic development corporation and see if they are offering any type of grants for small businesses. But federal grants, those do not exist. Another one is I don't need my own money to start a business. And that's another misconception, because you definitely have to have skin in the game. You have to be able to risk your own money and show that you're willing to risk your own money, especially if you're looking for funding. Whether it's a traditional lending institution or a non-traditional lending institution, they're all going to ask for 20% of what you're looking to borrow. So you have to put in the first 20% of whatever total you're looking to borrow. And so sometimes, that can be a huge roadblock for a lot of people, because they may not have that 20% that is being required. And it could be, 20,000, 40,000, just depending on what it is that you're looking to borrow. And then I get to deduct all of my purchases, and that's a misconception. We have, the purchases that you're going to be able to deduct are going to be business expenses, business related. And then I can get rich quick is another misconception. Most small business owners who are in business aren't rich, and most are living the lifestyle that they have envisioned for themselves. Now, are there businesses that have started in garages and skyrocketed and those individuals become rich? Yes, some of those have existed, but and do exist. But for the most part, us small business owners, we're looking to just live a lifestyle that we want to live and have for ourselves and our family. So always remember that if it sounds too good to be true, it is likely too good to be true. So finding yourself in business, ways owners get started. One is, of course, starting your own business from scratch. And again, most of the time, what we see is that people that are starting their own small businesses have experience in that business that they're fixing to start. So most of the time, they're coming out of working in that industry for 10, 15, 20 years, and now they're ready to go on their own. So that's always a very common denominator in a lot of small business startups, is that they have experience in what they do already, so they know that part of the business. The other is buying an existing business, a turnkey business, something that a lot of people do on pretty often. And the reason why they do that is because it is a lot easier to get into business and get that going. As far as with a new startup, you have to go from the ground up and grow that business and continue to bring awareness to that new business. Well, if you're buying an existing business, it already has the awareness and people already know about it, and it's just a matter of change in management and now taking over the management of that business. Another way is a franchise, buying into a franchise that has a proven business model. We see some of those as well when, especially like restaurants or different types of other franchise. Even the plumbing company that I used to work for, about 20 years ago was a franchise. And so they all had, in a franchise, they all have a proven business model that works and makes it a little easier, again, than starting from scratch, because you have something that people already are aware of and that people want. Then we have business transferal and inheritance. So those are going to be some of the other ways of finding yourself getting in business. But what we're talking about today is starting your own business. So one of the things that really requires or a requirement of success is planning. That's one of the things that we talk about all the time, is that we have to plan. And I always tell everybody that we plan in our daily lives, whether it's going to the grocery store, whether it's putting together a birthday party for our children, maybe you're planning for a wedding, or whatever it is that you're doing. You usually plan either a couple months ahead, maybe even a year, and that's okay, because planning allows you to really think things through and make sure that you have everything that you need to be successful, right? So if we take that much time to plan in our personal lives and the things that we're doing, then why not take the time to plan in our business life? And so planning is always going to be a biggest key factor to success for your small business. So that planning involves research, analyzing and understanding market demand, knowing your own skills of what your capacity is, realistic timeline for the startup and growth. I've seen where sometimes people tell us, hey, I want to start this tomorrow. Well, that's not very realistic, because we can't go from one day to the other and boom, we have the business going. So it takes careful planning. It takes making sure that you have the financing available, making sure that you have the resources, because your resources are not just financing or financial resources, but you also need capital resources and human resources. So it just depends on whether you're doing this business on your own or you're hiring maybe family members or even people outside within the community. So we want to make sure also, again, that we have sufficient capital, and we want to make sure that when we are looking for capital that we can take on what we can handle. So we don't want to borrow more than what we can, than what we can chew, right? And sometimes that isn't even sufficient. You may say, all I need is $20,000, but in reality, you may need 50,000, 75,000. Now, or you may say I need 150,000, and that may not be realistic either, because again, remember, you always have to put in that first 20%. So maybe you don't necessarily need that 150,000. Maybe you can start with 100,000. So whatever it is, and those are things that we can help you with as business advisors, and sit down with you and walk you through the process to make sure that, one, you're borrowing enough, and two, that you're not borrowing too much. We want to look at budgeting. We want to look at both income projections and expense projections, and then adequate capital for start and routine operations. Most of the time, we get clients who say, all I need is 20,000 or 30,000. And when we get down into the details, it turns out that 20, 30,000 only covered maybe the equipment that they're looking to buy and that they need in order to get this business started. So then we talk about, well, what about inventory, if there's going to be inventory? What about the rent? What about utilities if you're renting a location? Where's the money going to come from? If you're having to pay these other expenses and you only borrowed just for the equipment. So, what do we do there? And so that's why I say that sometimes we have to think about the other circumstances. And typically a business, it takes a good 6 months for a business to become, for people to become aware of your business. So you definitely want to make sure that you have enough funding available to cover expenses for at least 6 months. And so that's always a good, rule of thumb to kind of remember, and then make sure that you have enough funding to cover not just buying the equipment, but again, paying some of that overhead, right? Some of those expenses that are going to be there regardless of whether you sell anything or not. So let's take a look at the business start timeline. So the business start timeline is the point of conception, the idea. So you guys, many of you guys are probably at this point, maybe you're already beyond this point, but you had an idea. You came up with something that you said, hey, you know what? I think I can do this. And here's my idea. This is what I want to do. Now the second phase is assessing the idea. This is where we start looking at doing the feasibility study, looking to see if there is a demand for what it is that you're looking to do, looking to see if what value you're bringing to your customers, or what you're going to bring to your customers, because you may have some competitors already within the community that you're looking to start. So we have to differentiate ourselves, even if we are doing the exact same thing that someone else is doing. So we have to be able to find that difference maker, or that that competitive advantage that we're looking for, because we can both sell hamburgers, but both hamburgers may taste great, but service over here is horrible, and when you come to me, I'm giving you top-notch customer service. So it's just going to depend on what it is that you're looking to do, but doing that assessment really allows you to really think those things through. It allows you to be able to speak about your business. It allows you to see, is there really a demand? What problem am I solving? what value am I bringing in? Sometimes those are all a lot of hard questions to answer. The other thing it does in the assessment is that it allows you to really look at your target market. Sometimes we say, well, we want everybody to be our customer, and that's not necessarily true either. So, we have to look at who's our target market. We have to look at demographics, geographics, and psychographics. And so those are all going to be key important factors of narrowing down our target market. Phase 3 is now we've done the assessment, we've thought things through, we've created that business plan. Now, how do we get funding? So again, we can go through traditional lenders, we can go through non-traditional lenders, but again, we have to have a business plan, we have to have financial projections. Some of the things that the bankers are going to ask you for are 3 years of past tax returns. Again, you have to have that 20%. And there's going to be a lot of other things that they're going to require. But if you do this right and you do this slowly and make sure that you have all the resources or all the documentation, then it makes things a little bit smoother when you're trying to gather that financial resource. So once you've been able to secure those financial resources, now we can open the doors. So there's in phase 4, there's different phases of the business. So you may have some that, again, start in that garage and just take off and become gazelles. You have some that have a high potential of becoming a gazelle one day. And then you have small businesses who are lifestyle. Again, that's what I talked about earlier, is that these small businesses allow us to live the lifestyle that we want for ourselves, right? And that's typically where most of our small businesses tend to be. And then, of course, the fourth one is failure. So we've started a business and things don't go the way we want it, and it'll lead to failure. That's one place that we do not want to see anybody in. We'd rather see them in the other 3 different categories. And like I said, at least in the lifestyle category. So this is a point where where the growth assessment occurs. But this is basically kind of the phases that you're going to go through as a small business owner. So let's think about that business concept and think about whatever it is that you're looking to do and go into business with. You obviously see an opportunity. And so you obviously saw that there was a problem that existed in the community. You obviously also have a solution to that problem, which created the opportunity. And so this is the equation of opportunity. So it's problem plus solution equals opportunity. So you've gone through this equation even if you really didn't know that equation existed. Again, we talked about the feasibility study. We want to know who our customers are. We want to know who our competition is. We want to know the industry as a whole, whether it's something that we truly want to go into. Now, the other thing that in starting your business, we have to look at business structures. So one of the most well-known business structure out there, or probably 2, are sole proprietorship and LLC. So let's start with the sole proprietorship. The sole proprietorship is a one-person owned business, and you register your business name once you've come up with a business name in the county that you're actually going to reside. So wherever that business is going to be housed, whatever community. So if you're in Victoria, Texas, then you're going to go to the courthouse here in Victoria. If you're in Beeville, you're going to go to the B County Courthouse, and you're going to register your name. So in every community, that registration cost is going to differ depending from county to county. So in Victoria, I believe it's like $14 to register your name as a sole proprietorship. They also refer to it as an assumed name certificate or a DBA, which is doing business as. And so again, this registers your business name in the community that you're serving and working in. So that's one business structure. The other is a general partnership. So the general partnership is if you and someone else go into business together, you can do a general partnership, again, going to the county clerk's office. In that partnership, they will automatically see you and the partner as 50-50 partners. So you're not going to be able to say, well, I'm going to be 80% owner, I'm going to have 80% ownership, and they're going to have 20% ownership. So it's automatic 50-50. The other recommended business structures that we always see is the LLC and the LLP, and then you have the corporation as well. So these are business structures that are going to be registered with the state, and so you will have either an attorney doing these, setting these up for you. I mean, you could do it yourself too, but I don't really recommend it, especially if you're not really sure of what it is that you're filling out. You can have a CPA also put this together. So, and there's other ways too that you can also get this taken care of. But with the LLC and the corporation, the difference here is that you have more protection on your personal assets versus a sole proprietor or a general partnership. And we can talk about that a little bit further in detail. But these are going to be the legal structures that you want to consider, and make sure you're doing your research on this, and make sure you're talking to someone that understands the differences between the different legal structures, business structures, and that you choose the one that is right for you. So common resources, documents, we're looking at DBA. Again, you're going to get that at the county clerk's office. That's doing business as sales tax if you're going to be selling products, even things that are intangible like landscaping, photography. Those entities also have to collect sales tax. So you always want to make sure that no matter what it is that you're doing, double check with the state comptroller, and you can go on their website, or you can also contact them and make sure that you don't need a sales tax permit. So if you do need a sales tax permit, you would sign up and register your business with the state comptroller, and then they would submit a sales tax permit to you. The EIN, or also known as the employer identification number, that is going to be done through the IRS. Now, the employer identification number, I always like to refer to that as your business's social security number. As a sole proprietor, you can use your social security number as your EIN, but I don't recommend that, especially if you're dealing with, if you're going to have employees, if you're dealing with suppliers and vendors. A lot of times they're always asking for your tax ID number. So this is a much better way to identify your business without having to have your social security number out there all over the place, because your business's identification number has to show up on W-2s. It has to show up on maybe some of the paperwork, the W-9, I believe, for wholesalers if you're looking to buy from a wholesaler. So just remember that is something important that you want to get. Plus, you'll also need that with opening up a bank account. So again, if you do a sole proprietorship and you open a bank account with your social security number, you can do that. But then if you turn around and get a EIN number, now you have to go back to the bank. They have to close that account, reopen the account now with the new EIN number. So it's just better if you're going to get the EIN number, make sure you have everything, then go open the bank account, so you're not having to get something started and then redo the whole thing. Other licenses that may be required depending on your business are going to be city and county licenses, and those you get at your local city departments. And then state licenses, especially if you're, let's just say, a plumber or electrician, hairstylist, those are all regulated by the TDLR, which is Texas Department of Licensing and Registration, I believe. So if you're in any of those types of industries, you definitely want to make sure that you are contacting the TDLR and make sure that you have all the state licenses that allow you to do the work that you planned on doing. So again, the tip is must have legal structure to open a business bank account, which is what I talked about a while ago, and then secure business insurance. That's another topic that sometimes many people don't think about. I had a client one time say, I moved into a location and something happened in the building. I think they had a flood or something like that. Some pipes had busted, and she didn't have business insurance. So the good thing is that none of their inventory had been damaged, but imagine if that inventory had been damaged due to the water leak and her not having the business insurance, that she could have filed an insurance claim. So we want to make sure that we have sufficient business insurance for our business in case anything happens within the business. We want to make sure we have that sense of security that we will be taken care of as a small business, because that can take a lot out of your pocket and out of your cash flow if you're having to replace everything due to some kind of incident that could happen. Other legal considerations is copyright. That's idea and concept protection, contracts, leases, purchase agreements. These are some of the other things that you may have to think about. Trademarks, patents, bonds. So these are all other things that you may need within your business. And again, I would recommend either getting with a lawyer or someone that has a legal background to walk you through some of these other legal considerations. One thing that we also talk about is having a BEL team, which stands for banker, accountant, insurance agent, and legal or attorney, right? So we want to make sure that as small business owners, we're building relationships with these professionals, make sure that we're talking to these professionals, we're asking questions, and that that we can go to them as a small business owner and feel comfortable asking hard questions and getting the answers that we need. If you're not getting those answers, then it may be time to look for someone else that can give you those answers. So we want to make sure that BEL team, because that BEL team works for you, and so you want to make sure that you're getting the information that you need. Financing your business, I've talked a little bit about that already, but again, debt financing is where you're borrowing funds. It's a loan with terms, principal and interest payments, no exchange of company ownership, secured or unsecured. Short-term debt is less than 1 year, and then long-term debt is over a year. So most of the time, this is the type of financing that most small business owners are looking for and going to obtain is debt financing. The other is equity financing. So this involves kind of like your Shark Tank, right, where you're selling a portion of the business for fun. So you're losing control in some situations, but there's no obligation to repay the money. So these are investors who are looking to own a piece of your business. And so we don't see too much of that here within our office, but it does exist. And you just have to be aware that if you are going to have an investor or two or three or whatever you're looking for, that most of the time you're going to have to give up ownership of that business. And a lot of times most people don't want to give up ownership. So that's something that you also need to think about very, very carefully before you actually commit. Why do you need financing? One of those is for research and development, growth or startup expenses, purchasing a business, seasonal working capital, permanent working capital, equipment acquisition, real estate acquisition. So, you know, those are going to be some of the things that you're needing that financing for. Some of the other estimated costs in your startups are going to include, again, rent, insurance, legal advice, inventory, supplies, advertising, point of sale system, bookkeeping systems, and more. So there's going to be a lot of things that you really need to think through before jumping into starting a business and then finding yourself in a situation where you find out real quick that you don't have enough money to move forward. And a lot of times that puts you in a very hard spot because it leaves you kind of scrambling and trying to figure out, okay, what's my next step? So by doing the planning and by making sure you're doing all your homework, you cover all of your bases, and then you are able to start and feel comfortable with that startup. So let's talk a little bit about where your cash comes from and where it goes. So of course, this is your business here in the little yellow oval. So our cash comes from our customers. So we will have, without customers, we don't have revenue, right? So we want to make sure that we're taking care of our customers, make sure that we're doing the things that we say we're going to do. And then with that revenue coming in, we're able to pay our banker back for the loan that we received. We're able to pay those lawyer and accountant fees for the work that they're doing for us. We're able to pay that insurance agent for the insurance that we've just pulled on our small business. We're able to pay our vendors and suppliers. And that's another important thing to talk about, is because if we can't pay our vendors and suppliers, what happens? They cut us off, right? They say, well, you haven't paid, such and such invoices and such time. We can't supply you anymore. So guess what? It's cause and effect, right? So we don't pay our vendors and suppliers. We can't supply our customers whatever product it is that we are doing. Same thing with any of the others. They're going to cut us off, right? So we want to make sure that we're taking care of our customers so that we can pay everything that we need to. We also need to be able to pay our employees. If not, we're not going to have any. Make sure we pay our taxes, because we definitely do not want state comptroller or IRS knocking at our door. And then we definitely have to be able to take care of our family. That's always very important. And then you have us, the SBDC. We are in the darker blue, neutral partner. Again, we are prepaid, so you're not paying for anything out of your pocket. It's already been prepaid through taxpayer dollars. So we are a neutral partner here to help you and to make sure that you have everything that you need to be successful. And we're here to build long-term relationships. So it's not something that we're doing short-term and then you're on your own. So, but one thing that I want you to consider in looking at this slide is that look at all the arrows coming in, right? It's only from one source, which is your customer. But look at how many arrows are going out. You have what, 1, 2, 3, 4, 5, 6, 7 arrows, because we don't count the SBDC in there, but we have 7 arrows going out and 1 arrow coming in. So, this should give you a good picture of what a business is going to go through in terms of revenue. Usually that source is going to be one source, and then you have so many other things that you're going to pay. And so these are just a few things few expenses that you're going to encounter within your business. So you have to make sure that, again, you're continually planning and continually making sure that you have the cash flow available to be able to meet the needs of those debts that you've incurred. So financing your business, I've talked a lot about this from the beginning. Your traditional and non-traditional. Of course, your traditional is going to be your own cash, family, friends, credit cards, banks. Non-traditional, some of the things that some people have done is crowdfunding, some outside investors that we talked about earlier, non-traditional micro lenders like Lift Fund, People Fund, vendor financing, and then online lenders like Square and Cabbage and Intuit. So those are that's a list of the non-traditional lenders versus your traditional. And you guys can see this slide still, right? Gene, can y'all see this slide?
Yeah, Mark, it looks great.
Okay. I had my PowerPoint had gone off for some reason. But so the other thing is also bootstrapping. A lot of people will start their own business with their own money that they saved. So starting on a shoestring budget, very little capital, attempting to fund and build from little personal finances, new operating venue, sweat equity, and independence. These are some of the, on the bottom here, where we see Apple and Clorox and Coca-Cola. These were a lot of bootstrap startups where they had very little to work with and ended up, becoming what they became. But this is also a lot harder process, but it can be done. So a lot of times people don't want to get into debt, they don't want to borrow, and so they decide to use the resources that they have available, and that's okay. And it's just a matter of making sure that you're using that funding that you've been able to acquire efficiently. The other thing that we like to talk about a lot is the 5 C's of lending, and that's going to be that capital investment of that 20. Here on the slide, we use that 20 to 40%, just so that you make sure that you have enough cash there to inject for whatever loan that you're looking to get. Make sure that you have enough collateral, the capacity to pay that back, character and credit, and then conditions. So, your character and credit are going to be very, very important as well in obtaining that loan as you meet with bankers. They definitely want to know who you are and what you do within the community, and building those relationships are very, very important. So this credit score factors, one of the things that really helps your credit score is on-time payment. So that's going to be one of the bigger factors in your credit history and credit score, and then also the capacity used already. So when you're looking at your debt to income ratio, they're looking at how much can you actually take on with whatever debt you already have showing on your credit history. We want to make sure that we're working with our lender. We want to make sure that I always suggest that if you have a relationship already with the lender, with the banker, someone that you've been working with for quite some time, maybe you've had an account with this bank for a long time, that's probably where we would start. And we want to make an appointment with that banker, be professional, be prepared. And in the preparation process, that's where we are getting all of our documentation together, that assessment, that we're building that business model, we're creating that business plan, we're putting together financial projections to show that we've thought things through. We know how much money we need, we know exactly what it's going to be used for. So we have to be prepared, and be prepared to answer the questions that are going to come from that banker. We want to be honest, and then we ask for what you need, and then give the banker some time to look things over, make sure it is something that they want to fund. So, but just stay in communication with them as much as possible. Lending requirements, sources of income, they're going to look at. Sometimes, I have clients who are looking to obtain funding, and they may be working somewhere right now, but they want to quit that job and start their own business. Well, I don't recommend you leaving your job before you get funded. So the more sources of income that you have, the better it looks on that loan application. Business plan, projections, like I said, all those things we talked about. Tax returns, we want to look at last 3 years of tax returns, personal financial statement. That is something that any bank or any lending institution, traditional, non-traditional, are going to ask you for. And then again, the collateral and the 20% down in cash. I'm going to skip over this one. And so the business plan that we want to talk about too, we want to think about the business plan as a roadmap. So where is the business now? Where is it going, and how will it get there? So we want to use the business plan as a business resource tool. It's not something that we just do for lending. And sometimes, and I guess that we could also always put that into a misconception category, because sometimes most people, that's when they decide to write a business plan, is because they're trying to obtain a loan, and the banker said that they needed a business plan. But that's really not the purpose of a business plan, and that shouldn't be the only time that you're seeking to put together a business plan. It's really there to tell you where you are today and where you want to be tomorrow, something that's going to help you, stay on the straight and narrow, or, always say, helps you to sail that ship in the right direction, right? So as your business changes, as things happen in the business, it grows, you go into different maybe sectors that are related to that business that maybe you didn't think of in the beginning. That, again, that business plan is there for you to look at least every 6 months or a year. Make sure you're doing the revisions of what your business is doing now. It's a reflection of what your business is doing, a year from the time that you started, because everything changes, right? So we want to make those changes within our plan so that our plan stays relevant and is just not collecting dust on a bookshelf somewhere. So the business plan allows you to do a lot of different things, but it really answers a lot of questions, tells you, again, where you are today and where you want to be tomorrow, but it also keeps you in line of what your mission is, what your vision is for the business, and it also allows you to share that information with people within your organization. So goals to consider. We want to consider our business goals. We want to consider our personal goals, family goals, and all three of these should align in order for us to have a successful plan and venture. So a typical business plan outline, you're going to have an executive summary, and that's always going to be written last, even though it is one of the first thing, or one of the first things that you see within a business plan. We want to have a business description. We want to have an industry analysis, management and organization outline. We want to know what your marketing plan is going to be, your financial plan, and then the appendix and attachments. That's going to be another very important piece to your business plan, especially if you have, certifications, if you have, anything that is related to that business and what you're trying to do. Really, really helps especially when you're looking for financing, because that really proves too that you have the experience and the background to do and be successful in this business. Now, the other thing too that we want to consider in the appendix and attachments is to put your resume in there. Show that you have those 20 years of experience. If you're looking to open up a restaurant and you've been in the restaurant industry for 20 years or whatever, if you've been, any industry and you have that experience, you definitely want to highlight that experience. It's very, very important. So before you start, again, keep your day job. Take your time and do it right. Don't get in a hurry and just jump the gun and because you could find yourself somewhere. You could put yourself in a situation that you don't want to be in. Want to be honest with yourself and others. Sometimes it's okay to take your time, and you may not be able to start your business in the 2 or 3 month time span that you truly wanted, but it may take you 6 months or a year, and that's okay. That's being honest with yourself and knowing what you are capable of doing. Find your competitive advantage, and then of course seek professional advice and assistance. So with that, if you're interested in SBDC or Small Business Development Center assistance, you can meet with an advisor virtually. You can call our office, make an appointment, and typically we spend 1 to 2 hours for the first visit, getting to know you getting to know us, and trying to figure out what it is that you're looking to accomplish and be able to build a plan of action to move forward. We also maybe look at any paperwork, any research or anything that you've already done and completed. We can take a look at that. But also, if you are going into business with someone else, or you want someone else to come with you or be a part of that meeting, feel free to bring them. I think it's important, especially if you're going to have a business partner. It's important to involve everybody that is going to be a part of this business, and so we want to make sure that no one's getting left out. So with that, I think we have a few minutes. Are there any questions or anything? Like I said, I had to go through that a little bit quicker than normal due to time constraints. But again, if you have any questions, feel free to ask. If you need some assistance, feel free to call our office at 361-485-4485, and you can talk to Leticia, and she'll be able to get you squared away with someone and get you an appointment to be able to talk about the next steps in starting your own business.
Thanks, Mark. Everyone, we have unmuted mics from our end, so you can unmute yourself and ask Mark a question. This is a great time to do it. Maybe you have a question about some of the market research we can help with, or about some financing you're considering, or maybe what a lender is expecting you to come forth with. So if you'd like to go ahead and just unmute and ask Mark your question, or you can put your question in the comment box, in your question box.
Hello, Mark. I have a question.
Sure.
I do apologize. I missed probably the first 20 minutes of the presentation, so I'm not sure if you had covered this already. I'm looking to start a business here in San Antonio. I was just wondering, would you all be able to help far as finding out what's in the market, what's needed in the area, up and coming businesses? So I'm not trying to put, say, a coffee shop, and it's one that is coming in the same area.
Right. Yeah. So we as SBDC can with gathering research, and so we can definitely do that. Now in San Antonio, because we do have 1,100 SBDCs throughout the United States, and so in San Antonio, in your area, there is a SBDC located at the University of Texas, San Antonio. So that would be your point of contact. And you could contact that office, and they would be able to help you with obtaining that research and anything else that you need with the startup.
Thank you.
Sure, my pleasure.
Okay, do we have anybody else who'd like to ask Mark a question? Now's a great time. Okay, well, I don't see any further questions. Mark, thank you so much for giving us your time today. And I want to thank everyone that's been here for taking part in our First Steps to Starting Your Business webinar. As you leave today, as we end the session, a pop-up window will appear with a link to the survey for today's webinar. We ask that you complete that, click on that link, complete the survey. Takes less than a minute, it's only 5 questions, but all your input helps improve what our training program provides. Alicia, do you have a question?
Yes, will we be able to get a copy of the slides?
Yes, ma'am. Today's webinar has been recorded, so either later this afternoon or early tomorrow, you will get a link to that recorded webinar, plus a couple of handouts that Mark likes to make sure his attendees get, helping you estimate your cost of starting a business. That's, as we know, financing is just so important. But again, we'd like to thank everyone for joining us this morning. As always, we want you to stay safe, have a great day, and this will conclude our webinar. Thanks, Mark.
Thank you.